a very vital role in driving economic growth in any economy because of the intermediation role that it plays. And for us, in EY, we continue to seek insights and ideas to help our clients to make the right decisions. And you know that having the right information, current information across the whole markets will be very, critical for our clients to make the right decisions as they try to drive their business, forward.
Okay, right. You categorized these markets. Yeah. You have the frontier markets. You have the transitional markets, and you also have established markets. Now, you categorized Nigeria and Vietnam as frontier markets. Yes. Why?
Yeah, because the group in frontier markets, they have their GDP between maximum of $2,000. And you agree with me that the GDP in Nigeria as of 2011 stood at 1,502, while Vietnam stood at $1,407. And these economies, they begin to monetize and demand for financial services. That's why we categorize them as frontier markets.
So, Mr. Henry, looking at these three categories, how would you differentiate them really? What is the difference? You having a frontier market, the transitional market, and the established market?
I think it's mainly from the point of view as to how does this impact, on financial services in terms of product demand, in terms of the kind of, expectation this kind of, groups will expect. As Dayo was saying, at the frontier market level, you are not at, once you are below $2,000 per capita GDP, you are mainly just beginning to demand your penetration in the financial market space is low compared to where you have already established markets that are above, where the per capita GDP is above 2,000. And then when you have the established one that probably be above $8,000, then the penetration is much more. It also related to your disposable income, actually. So the more money you have, the more demand you have in terms of your access to credit and the kind of consumption that drives your financial services demand.
All right, Mr. Dayo, you're itching to say something.
Yeah, if you don't mind me to add, like the frontier, we have said they are below $2,000. The transitional, they are between $2,000 and $8,000. And then when you say established, rapid growth market, the RGMs, and then you're talking of between $8,000 and $20,000. And like Henry rightly said, when you are in the established rapid growth markets, then that means you are fully there. And you are looking at countries like Chile, Malaysia, Mexico, South Africa, and Turkey. In Chile, you have $14,394. And then, let me go straight to Turkey. You have $10,524,000 per capita. Whereas in the transitional rapid growth markets, you're talking about $2,000 and $8,000, where you have Colombia with $7,104, and Egypt, $2,781 per capita, and Indonesia of $3,495, where compared with Nigeria and Vietnam, Nigeria with $1,502 and Vietnam of $1,407.
Now, so does that mean Nigeria still has a long way to go?
Definite.
Yeah, Nigeria has a long way to go, but what that just means is that there is room. There's a lot of room to grow, and that's the attraction. That means there's scope for new investment, and that that's why you have banks all focusing on investing in this sector in Nigeria, because there's a lot of room for growth.
Okay. So what
the more matured you are, the more the less the area to drive growth.
What methodology did you use in conducting this survey?
Talk about that. Yeah, what we did, because this survey was anchored globally by Ernst and Young, so we sent out questionnaires asking some probing questions from our respondents, and it covered those 10 countries. And we have minimum 50 and that accounted for 40% of the total banking population in these economies. So it's as a result of survey.
You want to add something, Mr. Henry?
No, I'm sure you captured the...
Yeah. Okay, let's look at some of your findings.
Yes.
On Nigeria. Now, in terms of financial performance, I suppose you asked questions from bankable individuals, those who use the banks. So in terms of financial performance, what are their expectations?
Thank you. Let me correct the impression. It's not the bankable individuals, but we directed our questionnaire to the banks, that is the operators.
Okay.
Okay, as against the customers.
Okay.
And their response really is that they are expecting a sort of growth. If between 2012 and 2016, they are saying they're expecting about 80% of growth. But something that came out clear there has to do with the large population that is still unbanked. And the banks in Nigeria are really trying to reach out to this unbanked population. Also, investment in infrastructure is another issue that came out clearly. And then also they talked about the social unrest that will impact the growth in these markets.
Okay. What about
I think clearly, there's a lot of optimism about increase in performance, and I think if you've seen the reports, the annual reports for banks that have been coming out in the press, you've seen that already. So you see a lot of improvement in the performance of banks relative to prior years, because those were the years when they were just coming out of the reforms. There were a lot of bad loans, provision for bad loans that actually hit the bottom line, and their bottom line result was very poor. But we've seen a very significant improvement in a couple of in this year for the banks that have released their results. So you see that tracking already. I think one thing that also came out is the demand. We've seen increase in demand for credit. There's credit expansion, which was what they expressed that, and that has come out as well. And linked to that is the fact that there's also apprehension, as regards credit risk, and then the need to strengthen processes and the risk management structure to ensure that they don't go back to the trenches where they're just coming from.
Okay, what about the area of product demand?
Yeah, product demand. There's also, increase for. When I talk about increase in credit, that's a product, and that's a product. So you also see. I think the expectation is that as Nigeria, I think the projection is that by 2017, Nigeria would have reached the per capita GDP would have reached 2,000. And then you will see more demand, for financial services products. And we also see, I think one other issue that came out is the fact that you will see more focus on project finance. As government begins to drive, investment in infrastructure and the, public-private partnerships, investment in power sector, which you've seen that happening already. The unbundling of the PHCN has created, power assets that require a lot of investment funds to get in there. The apprehension is that with the size of the balance sheet that we have with the local bank balance sheet and the access, the access to the limited access to funding, that the local banks may not have the kind of muscle to actually take advantage of these opportunities. So you may have more opportunities for international banks who have bigger, stronger balance sheets and who have access to a broader base of investor funds.
Okay, Mr. Dayo, you have something to add
Yes,
to that?
the banks are bullish about lending to all sectors. But the worries here is as you have more products in the market, it increases the credit risk. And the fear is for an economy that is solely dependent on oil. This, if not checked, if not properly married, may lead to, something not so good. But I know the bankers will be working on this. They are very bullish about lending to all sectors. That I can assure you. And from corporate banking perspective, bankers are most bullish about project finance.
Okay.
Now.
Okay. All right. Your finding also says that banks remain more focused on domestic opportunities rather than cross-border expansion. What does that imply?
Dayo,
yes.
Then I'll add on to it.
That's good. They're looking inwards. They're looking inwards. But the fact remains that considering the level of capitalization required to compete effectively globally, they cannot only be looking inwards. They will need the assistance of these stable global players to come really and assist in increasing the capitalization.
Okay. Now, generally, what are your recommendations?
Can I just ask to what Dayo said? I haven't said that what Dayo has said is quite right, but you also remember that most of our banks, there are some of our banks who have gone, who have regional, spreads right now. Even African, Africa-wide, who has spread Africa, we can look at the UBAs, who have almost about 19 branches across Africa. The Access Bank of this world, who have, branches across West Africa, across Africa, and even in London and the US. So what has happened is that in the last couple of years, they've been so, concentrated on the reforms that are going on, issues around, IFRS, issues around, creation of the bad, of the bank that took off their bad or the economy. So they have been so engaged in dealing with these domestic issues that they haven't had time to focus on the international market at the moment. But I'm sure as this stabilize, you will see a lot of expansion into this international market.
Okay,
sorry, before the general, I just want to add that you discover that in some established rapid growth market, such as South Africa and Malaysia, they have already embraced the equity market, but bond market remains less developed. And the same thing in the other categories, frontiers. They rely more on savings, but the capital market, the debt is so shallow.
And what is the implication of that, even for Nigeria?
The implication of that is that it will not allow you to expand as you would like. Because by the time you compare your savings mobilization with the debt and equity, then you'll be able to have massive money to trade with and also to embark on a lot of projects.
All right. So generally, going by your findings, what would be your advice to the banks in Nigeria, really, so that they can come up too, like the others in the established frontier?
Yeah, thank you very much. On that, I would not look at only the operators. I will also advise the regulators. As we speak, the level of the cost of funds is high here as compared with other geography. So I will advise that they should work closely with the regulators to look at the best way of bringing down the cost of funds. Because once the cost of fund is still high, it's going to affect adversely, the manufacturing sector. Yes, the banking industry will be growing, but the rich sector, that is the foundation of growth, will be shrinking. And if the banking industry, that's not the rich sector, is growing at the expense of the rich sector, then there may be a danger. So there is need, for the operator and the regulator to look for ways of bringing down the cost of funds. And this may interest you. What we refer to here as mortgage loan, really, to me, I would call it a bridging facility. When you are having a mortgage loan, for instance, with high interest of, say, all inclusive of 21%, 22%, and it's going to run not for a very long time, maybe max of 10 years, 15 years, depending on your age to retirement. It's not helping. It's not helping.
Okay.
I think there's also the need to look at the unbanked. You know, currently in Nigeria, I think the bank, in terms of banking penetration, is just less than 30%. So there's a lot of money in the informal sector that is not in the formal, it's not in the banking sector. So the banks need to look at how do we bring that money into the sector to expand their, you know, the base.
Well, I think that's exactly what the CBN is trying to do with its financial inclusion strategy.
Right.
Well, thank you very much, gentlemen, for coming. Well, I've been speaking with Mr. Dayo Babatunde. He is the financial service sector leader for West Africa, Ernst and Young, and Henry Ibiki, regional managing partner of Ernst and Young, West Africa. And we've been looking at 2013 banking barometer.